Hello everyone, welcome to EduTap and welcome to today's session. So today I have brought for you the important RBI notifications and the RBI press release. Today we are going to have the revision of the important RBI notifications and the RBI press releases that are important from the RBI Grade B 2024 examination point of view, and we are going to discuss the important notifications of May 2024. This is the part 1. Okay. So good morning everyone. I hope I am clearly audible and visible. Give me a thumbs up if everything is fine, and good morning to everyone. Okay, so as many of the students requested that they also want a session for the revision of the May 2024 RBI notifications and press releases, and we had no slot left in the evening slots, so that's why I have brought this in my Finance 360 series, so that you are getting the things that you want as well as you are getting the important RBI notifications and RBI press releases. Okay, so many of the students requested, and that's why I'm bringing this revision in the Finance 360-degree sessions. Okay, so now I hope you are prepared for today's session. I hope you have revised the notifications and press releases. Now let's get started, and before that, do subscribe to the YouTube channel of EduTap so that you continue getting such relevant videos from the examination perspective, as well as if you want the PDF of the session, you can get the PDF of the session in the Telegram channel of EduTap. Okay, so the link for the Telegram channel is provided in the description box below. So let's start with the first question. I hope many of you will be able to answer this question. So try to answer this question, okay? Pooja, I will cover them. Do not worry about it. Pratul, you should focus on your static part rather than the current affairs part right now, because in the SEBI examination, 95% or 98% we can say, like most of the questions come from static. So you should be focusing on your static part, okay, for the SEBI. KLEMS, have you seen the data in that? KLEMS, I will take that in the revision session. It is not required that I take a separate session on KLEMS, okay? So if, let's say, how many of you are able to answer this question? So the fintech repository, so you have to tell that which of the following statements is or are incorrect, that you have to tell me, okay? So the first statement is regarding the fintech repository, the second statement is regarding the EmTech, and the third statement is regarding the fintech and EmTech, okay? So try to answer this. Okay, I'm getting the answer B. You have to tell incorrect statement. So first of all, the fintech repository aims to capture the essential information about fintech entities, whether they are regulated or they are unregulated. The fintech repository is asking for data points from all the fintechs. Okay, then there is the EmTech repository that is specially launched for the RBI regulated entities, that is the banks and the NBFCs, for the technology that they are using, rather than this complaints. No, the EmTech repository is specifically for the technology that is being used by the regulated entities. Okay, so the second statement is wrong. The third statement, is it correct? This is correct. The fintech and EmTech repositories are secure web-based application. They are managed by the Reserve Bank Innovation Hub. So this is very important point that can directly come in the examination, and you have to be sure about it. So only the second statement is wrong, and that's why E is the right answer here. E is the right answer here. Okay, so here you can see that there is the fintech repository, there is the EmTech repository, and the repositories are being managed by the Reserve Bank Innovation Hub, a wholly owned subsidiary of the Reserve Bank of India. Now coming to the next question, so try to answer this question. Let's see that how many of you are able to answer this question, okay? And see, many of the students request the May session, and that's why I have brought it for you. If you think that you do not require the revision session, you can comment down below, and I will not take the revision session for the July and the other months. Rather, I will focus on the topics. Like, it depends on your request. If you are requesting me to take the revision session, that's why I'm bringing these sessions for you, okay? So it depends on the request that the students are putting out, okay? Now, the RBI has recently launched PRAVAAH. Which of the following statements is or are correct in regards to PRAVAAH? So, first of all, what is the full form of PRAVAAH? Because you know directly from the full forms, the questions have been asked in the examination in the previous year. So, it is the platform for regulatory, what is here? Tell me. Validation, that is correct, and authentication. Rather than authentication, what is here? So, tell me that instead of approval, what should be here, and instead of authentication, what should be there? So instead of approval, there is application. Instead of authentication, there is authorization. So you need to be very specific about the full forms of the topics. Okay, this portal will also enhance the efficiency of various processes related to granting of regulatory approvals and clearances by the Reserve Bank. That's why this portal has been launched by the Reserve Bank of India, so that the processes become easier for the regulated entities. Regulatory or supervisory returns can also be filed through PRAVAAH? No. It is the PRAVAAH is for the applications, validations, it is for the authorization, it is not for the returns or for the reports that you can share with the RBI. No. So second statement is correct, third statement is wrong. So 1 and 3 statements are wrong, only second statement is correct. That's why D is the right answer here. Okay. Yes, all of you have given the right answer. Very good. Good to see that you know about PRAVAAH, which is one of the most important things right now. Okay, this is one of the most important topics right now. So you can read more about PRAVAAH. I have taken a complete session on PRAVAAH. Now the Retail Direct Portal was launched in Dash to facilitate the retail investors to open their Retail Direct Gilt accounts with the Reserve Bank of India. Okay. Under the Retail Direct scheme, the scheme allows retail investors to buy which kind of securities or which kind of bonds and such in the primary auctions as well as in the secondary market. So very easy question. Try to answer this question. Let's see how many of you are able to answer this question. So the answer here is B, that is in November 2021, this scheme was launched. This Retail Direct Portal of the Reserve Bank of India was launched, and it is for the trading in the government securities for the retail investors. Okay, so this is the basic idea. Now coming to the next news article, that is ARCs. So this is one of the most important master direction that has been released by the Reserve Bank of India regarding the asset reconstruction companies, and the ARCs have been in news quite a lot. So try to answer this question that is regarding the ARCs, that is regarding the asset reconstruction companies. Okay, so you have to tell that which of the following statements is or are correct in regards to the recent directions for the asset reconstruction companies. So try to answer this question. ARCs existing as on October 11, 2022 have been provided a glide path to achieve the minimum required net owned fund of rupees 100 crore. Is it correct? Is this statement correct? Right now they have rupees 100 crore of the NOF, net owned fund. So a glide path has been provided to them, that is by March 31st, 2026, they have to achieve 300 crores worth of the net owned fund. So they need to have 300 crores of the net owned fund by March 31st, 2026. So this is the glide path that is provided to them. That is, they already have 100 crores of the net owned fund. They need to have 300 crore of the net owned fund by 2026. Okay, so this is the basic idea. Now every ARC shall maintain on an ongoing basis a CAR of minimum 15% of their total risk weighted asset. That is also correct, that yes, they have to maintain 15% of the risk weighted asset. Okay, every ARC shall make provisions against NPAs, and a general provision of 10% of the outstanding amount is required for substandard assets. So there are different categories of assets. There is the substandard assets, then there is the doubtful assets, then there is the loss assets. We have discussed that what are the substandard assets, that are NPAs for less than 12 months. What are the doubtful assets? What are the loss assets? We have discussed all of this. Now, for the substandard assets, there is the provision of 10% of the provision that has to be maintained. So general provision of 10% that has to be maintained for substandard assets. That is correct. So second and third statements are correct, and you have to find the correct statements. That's why C is the right answer. Okay. So ARCs, these directions are important. That's why I have discussed it a lot of times, and these were a little complicated, but I have taken extensive session on the directions. Okay. So this is the basic idea, that CAR of 15% and the provisions that have to be maintained for substandard assets, doubtful assets and loss assets. All of this we have discussed in detail. Okay. Now coming to the next question, try to answer this question. Let's see how many of you are able to answer this question. So here ARCs, this is also again about the ARCs. So ARCs, activities of asset reconstruction companies, so they are involved in various activities. So ARCs have been permitted to become the resolution applicants under the Insolvency and Bankruptcy Code if they follow some criteria. So that is correct, that if they follow some conditions, then only they can become the resolution applicant. Now what are the criteria? That their capital adequacy ratio should be 1000 crores and such, sorry, their net owned fund should be, their net owned fund should be 1000 crores and such. Okay, so there are certain criteria that they have to follow. These are the criteria, that their minimum net owned fund should be 1000 crores and such criteria they have to follow. Then they can become the resolution applicant. ARC may deploy its funds for undertaking restructuring of acquired loan accounts with the sole purpose of realizing its due. Yes, the ARC are the asset reconstruction companies that are buying the financial assets that are under the stress, and they have to realize the dues of the asset of the loans that have been given. ARC may deploy any surplus funds available with it in terms of a board approved policy in short term instruments under the cap, under the maximum cap of 10% of the net owned fund. So this is also correct, right? Now coming to the next statement, any land and or building acquired by the ARC in the ordinary course of its business of reconstruction of the assets while enforcing its security interest, that is enforcing the collateral, that is the security interest, shall be disposed of within a period of how many years? Within a period of 5 years. Okay, and ARC may, as a sponsor and for the purpose of establishing a joint venture, invest in the equity share capital of another ARC. That is also correct. So here, which is the incorrect statement? Which is the incorrect statement? No one was able to give the right answer. Why? C. C is correct. C is absolutely correct. Okay, that is, you can invest in the short term, instruments up to a limit of, up to a cap of 10% of your net owned fund. D was the right answer. Got it? Read the statements carefully. Read the statements very carefully. So here the right answer was D. It should not be 2 years, it should be 5 years. That any land or property that is acquired by the ARC has to be disposed of within 5 years, within a period of 5 years from the date of acquisition. Got it? So this is the idea. Be very like attentive in the examination, because you have to give the right answers, right? Being fast is good, but do not ever think that the examiner is just throwing numbers at you. There might be some changes that must have been made, okay? Or there might be some loophole in the question or something. So be very attentive when you are reading the question, and you have to answer in a fast manner, but also in a correct manner. Now coming to the next question, that the ARCs shall formulate the policy for realizing the financial assets under which the period for realization should not exceed 5 years, but with the permission of the board approved policy, the realization shall extend up to how many years? 8 years. Very good. Okay. The board of the ARC may increase the period for realization of financial assets so that the total period for realization shall not exceed 8 years from the date of the acquisition of the financial asset. So this is a simple question, but such kind of direct questions can come in the examination. Now coming to the second question, that the ARCs shall, by transferring funds, invest in the security receipts. So asset reconstruction companies, they have to invest in the security receipts. What are the security receipts? What is securitization? All of this we have discussed in the session that I took regarding the ARCs. That the ARCs, if they are buying the financial asset, if they are buying some loan, that is the stressed loan, and they do not have the money to buy this loan, they can raise the money from the qualified buyers through the security receipts. Now these qualified buyers, that can be financial institutions, they are buying the security receipts. Okay, ARCs should also invest in the security receipts at a minimum of at a minimum of either 15% of the transferor's investment in the security receipts or 2.5% of the total security receipts that is issued, whichever is higher. Okay, so ARCs have to invest in the security receipts up to 15% or 2.5% of the total security receipts, up to the 15% of the transferor's investment or 2.5% of the total security receipts. So here the right answer is 15 and 2.5. Yes, titanium, correct. So here 15%, minimum of either 15% of the transferor's investment in the security receipts or 2.5% in the total security receipts that is issued. Okay, there is also the rating criteria. In this, the main idea is that the NAV of the security receipts are the recovery percentage divided by the face value of the security receipts. Okay, so NAV of the investment in the security receipts, this is how the NAV is calculated, and there is the rating scale. There is a rating scale according to which the credit rating agencies have to give the rating to the security receipts. So this recovery rating, there is a rating scale that has been developed that is known as recovery rating scale. Okay, so according to the recovery rating scale, the CRA, the credit rating agencies, they give the ratings to the security receipts. Okay, so the higher the rating is, the better it is, and the ratings are usually in the like plus minus 10%, that is 80% to 90%, 90% to 100% and such, and they are given the rating of A, let's say AB, and such ratings are given. Okay, so now as well as ARC can utilize a part of the funds to reconstruct or to restructure the financial asset. But such restructuring can happen, the money that has been taken from the qualified buyers for the security receipts, the ARCs can use it for restructuring of the financial asset, but only when the ARCs have acquired the asset in excess of 500 crores, they can float the fund under a scheme where they can use a part of the funds that have been raised from the qualified buyers for restructuring of the financial asset. So if they have bought a stressed loan, a stressed financial asset, and the value of the financial asset or the acquired asset is in excess of 500 crores, then the money that is raised, a part of the money that is raised from the qualified buyers can be used for the restructuring of this financial asset, and that is up to ceiling of 25%. So if you have raised 100 rupees from the qualified buyers, you can only use 25 rupees for the restructuring of the financial asset. Okay, so this is the basic idea. Now coming to a question. Now in the phase 2, if you remember, in the phase 2 of the RBI Grade B examination in the previous year, in the RBI Grade B 2023 examination, there was a question, there was a statement based question from the governance rules. Okay, so such a question can come in the phase 1 now, or it can come in the phase 2. That is, the governance rules have been given for the asset reconstruction company. Okay, so you need to have the basic idea here. What are the governance and conduct directions for the ARCs, for the asset reconstruction companies? So which of the following statements is or are incorrect, that you have to tell me. So no person shall continue as MD or CEO or WTD beyond the age of 70 years. Within the overall limit of 70 years, the asset reconstruction companies can have internal policy to set a lower limit than the 70 years for the MD, CEO or the whole time directors. Okay, WTD. Tenure of MD or CEO or WTD shall not be a period of more than 5 years at a time, and the individual shall be eligible for reappointment. However, the post of the MD or CEO or WTD shall not be held by the same person for more than 15 years continuously. The chair of the board. So this statement was wrong and you had to find the incorrect statement. So directly you can tell that B statement is incorrect, and you can read the later statements also, and you can understand that okay, these are the directions for the governance and the conduct for the ARCs, for the asset reconstruction companies. So I have discussed all of the directions about the ARCs with you, and you need to remember that a question can come from this direction. So at least have the basic idea. Okay. Now coming to the next question, try to read this question and try to answer this question. Anyone who is able to answer this question? So the Reserve Bank of India has revised the guidelines for the custodian bank to issue the irrevocable payment commitment. So the custodian bank can give irrevocable payment commitments for their customers, that are the mutual funds or the foreign institutional investors. Okay. So no one was able to answer this question. So first of all, only those custodian banks will be permitted to issue IPCs who have a clause in the agreement with clients giving the banks an inalienable right over the securities to be received as payout in any settlement. So that is correct, that you can give the IPCs only when you have the inalienable right over the securities. Okay. Next is the clause of inalienable right over the securities by the custodian bank will not be insisted upon if the transactions are pre-funded by the client, by the customer. So that is correct. If the mutual fund already have money in their accounts, if the foreign institutional investor already have the money in their accounts, so then there is no need to have the inalienable rights. Okay. The maximum intraday. Okay. So many of you are saying C is incorrect, and that is absolutely correct. The A is correct, the B is also correct, because yes, inalienable right is not required if the purchase is pre-funded. If it is pre-funded, there is no need for the inalienable right. So this is also correct. C statement is incorrect, because if you see this point very clearly, the maximum intraday risk to the custodian bank issuing the IPCs would be reckoned as capital market exposure. So if the IPCs are given, if the irrevocable payment commitments are given, there is the capital market exposure of 30% of the settlement amount. This is based on the assumption of 20% downward price movement of the equities on the T+1 with an additional margin. Additional margin is of 10% and not 20%. So the additional margin is of 10%, while the downward price movement on the T+1 is considered at 20%. So I hope you will read the statements very, very carefully. Okay. You're most welcome, Ankit. Good to hear that. Let's have an applause for Ankit. He has cleared, he has been selected in RRB PO. So congratulations, Ankit. Good to hear that. And I hope many of you reach to the good places and you reach to the positions that you want to reach. Okay. So congratulations, Ankit, and a big round of applause for you, and all the best for your future. Okay. Now, in case of margin that is paid in cash, the exposure will stand reduced by the amount of margin paid. That is correct. In case of margin is paid by way of permitted securities to mutual fund or foreign portfolio investors, the exposure will stand reduced by the amount of margin after adjusting for the haircut and such. So all of this we have discussed, that if the margin is paid, the margin can be paid in the form of permitted securities. Okay. Now, if the permitted securities are being given as margin, first of all, your exposure will decrease by the margin, because the exposure is already, a part of the exposure is being covered by the margin, as well as what will happen that this permitted securities value will be considered at a haircut value at a, like if the by 5% or by 10%, the permitted securities value will be taken lower. Okay. So if the permitted security value is 100 rupees and the haircut is 10%, so that means the permitted security value will be taken at rupees 90. Okay. So this is the basic idea. Here the C statement was incorrect because it was like vice versa. Here it should be 20%, here it should be 10%. Okay. So all of this we have discussed about the IPCs, about the irrevocable payment commitment. Now coming to the next question, and this is the last question for today. Let's see how you are able to answer this. Ankit, you can contact us through hello@edutap.co.in. So this is the mail ID. Okay. So the instructions contained in circular, there is like irrevocable payment commitments. Now it is for T+1 settlement cycle, but before it was used to be T+2 settlement cycle. The maximum risk to the custodian bank issuing the IPCs under T+2 is how much percentage? And for T+1 and T+2, for 2 successive days, 20% is the risk, while the additional margin is taken at what percentage for further downward movement? So that you have to tell me. I'm getting the answer E, and that is absolutely correct. Very good. So basically the idea is that the IPCs would be reckoned at 50% of the capital market exposure. The downward price movement that is taken for T+1 and T+2 days is 20% each, that is 20% for T+1, 20% for T+2, and 10% of the additional margin is taken. So in total the capital market exposure is taken at 50%. Okay, so answer is E here. So this you can read. Now before ending the session, I want to show you that EduTap has brought for you in the free material. If you go to edutap.co.in, in the free material you can go to the blog section, and if you go to the blog section, in the exam information, you can get the information regarding any of the examinations that is mentioned here. So if you want to know about RBI Grade B, you can have the exam information regarding RBI Grade B. You can have information regarding the different components of the RBI Grade B, and different informations are provided here. If you want clarity about RBI Grade B, you can have it from here. Then if you want to know about the strategy for the examination, for the strategy also the information is provided here. Okay, if you want to know about that how the toppers were able to achieve their dreams, so the success stories have been written here, their strategies have been written here, what they said have been written here, so that you can read about it. And if you want to know about the courses also, if you want to know about the courses of RBI Grade B or SEBI Grade A or NABARD Grade A, you can know about the courses also. So for RBI Grade B, you can know that what are the courses, as well as who is teaching, what you are getting, like in crash course you are getting live classes, summary sheets and such. So if you want to know about a particular course, that is crash course or test series and such, you can know about it. Whatever we are providing is written here, and who are the faculties that are involved, that is also written here. Everything is you can get through this website. Now coming back, do tell me that out of 10 how many marks you have got. In the next session, I will do the revision. I will take the revision session of the part 2, but at the same time, I will also discuss the KLEMS data. But this data is actually not, like, it is not provided in the box format or such. I will show you that why we are not discussing this data, okay? Ankit, you can like connect with me through this. Like if you ask the team, they will connect you with me through hello@edutap.co.in. Okay, so you can mail here and you can ask to connect with me, and they will connect you with me. You can, like, if there is any like, they will share your message with me, and they will also keep you in the loop, so that you know that the messages are reaching to me, as well as if you want to discuss anything in regards to your preparation, or if you have any confusion, they will connect you with me. Okay, okay, so this is it from my side. Many of